What do you do, Kanekis? Welcome back to the channel. I hope you're all doing well. Now, I know I've been away for a while. My apologies. I went away on holiday, but I'm back. I am back, and in this one, we're going to be talking about tariffs. What are tariffs and who pays for them? Spoiler alert, it is us, the consumer. But I will tell you exactly why it is us and not actually corporations or businesses. But before we get into it, please hit the like button. Subscribe as well if you're new and you haven't already. It helps the channel massively by helping us to grow and helping the video reach out to more people. So let's get into it. Tariffs. What are tariffs? What is a tariff? So Google's Gemini defines tariff as this. A tariff is a tax imposed by a government on imported or less commonly exported goods. It's hardly ever exported goods, unless it's something that's quite strategic to the government, like raw materials or minerals. And it's often used to protect domestic industries from foreign competition or to generate revenue. So a tariff is a type of tax. It's a tax. It's a tax on the people, specifically levied on goods that cross international borders, either entering, which means imports, or leaving, exports, a country. So we have heard a lot of headlines. We've seen a lot of headlines these days about Trump putting tariffs on goods from the EU, Canada, Mexico, China. Let me just start by saying this is not political. I do not care about politics. This is purely economics. I mean, God, Trump he's on the right. He's using tariffs. Trudeau, who's now left though, from the Canadian Prime Minister, and also the EU politicians who are on the left are also using tariffs. So it's not a political thing. This is just pure economics. That's the point of view I'm taking this from, by the way. So don't come at me if you're anti-Trump or pro-Trump. Anyway, so the purpose of tariffs is to protect the nation's interests. So if a nation manufactures goods, for example, cars, they would put tariffs on imported cars so that the citizens in that country can buy cars made by, in this case, American companies. So think Tesla, Ford, Chevrolet. I believe Chevrolet is an American car manufacturer as well. So yeah, that's typically what tariffs are supposed to do. So to summarize what they are meant to discourage imports and they're meant to incentivize buying local goods. You remember from the previous video about GDP being a faulty measure, a faulty metric. It still is, but there was a part in the formula that I mentioned that I'll come back to in another video. So to recap, the GDP formula is calculated by adding consumption, so that's public spending, G, which is government spending, I, which is investment, and net exports, which is exports minus imports. So all of this is dollar values. It's not volume. It's actually dollar amounts. So when it comes to tariffs, we're looking at net exports here. Like I said, it is meant to disincentivize importing and it's meant to incentivize buying local or exports. So exports minus imports, that means NX, net exports, is supposed to go up, meaning GDP goes up. So it's meant to be a net positive for GDP. However, there's always a however with my videos. However, the actual reality is if that country doesn't actually manufacture its own goods, the citizens are still going to need to buy imports because there's no other way for them to get a good. So the import volume stays the same, but the import price increases because remember, it's a tax. And the companies, the importers, they don't actually pay the tariff. So you would have heard of Trump and Trudeau and the EU politicians saying, "Oh, we're going to put tariffs on American goods. We're going to put tariffs on European goods," as if the companies, the manufacturers in that country are the ones paying the tariffs. No, what they're actually saying is we're going to make American people pay more for our goods. So they pay more for this. Net exports actually goes down because imports are costing more than the export value. So GDP goes down. GDP, 2 consecutive quarters of negative GDP growth is recessionary. So what all this is meant to do is meant to cause a recession. Now, the Atlanta Fed, you would have heard of me talk about the Federal Reserve. The Atlanta Fed is just a branch of the Federal Reserve in Atlanta. And they've released an estimate for GDP for 2025, and they have completely slashed their estimates for GDP growth. So like I said, 2 consecutive quarters of negative GDP is recessionary. So Dr. Antoni on X, I follow him. He's a really good account to follow, by the way. He releases lots of economics stats and data, so do check him out. He released this. He said, remember when GDP contracted under Biden, but Dems said that wasn't a recession? Well, what will they say now that Trump is president? Atlanta Fed's GDP nowcast for Q1 just plunged from 2.3% to minus 1.5%. As everyone begins to realize our growth has just been debt fueled by government spending. Remember, government spending is also an element in the GDP formula. So what the Biden administration was doing was they were just pumping so much cash in defense spending, which really, all it did was to help prop up the GDP so people would think that the economy wasn't in a recession, even though it really has been. To be honest, the economy has been in a recession since 2008. So that was the great financial crisis, all over the world, not just America, EU as well. Germany, oh my gosh, Germany is, the Germans have been struggling all the way since 2008. And the other downside to this, I'm just going to return to the GDP formula real quick. The other downside to this is because it's the consumer, it's because it's us, the locals, the citizens paying the actual tax on this and not the companies, means that we're going to have less disposable income to pay for other goods and services. So let's say we wanted, I'll use the car example again. Let's say we wanted to buy an imported car. Say an American wanted to buy a Mercedes, and there's a 15% import tax tariff on the Mercedes. So that extra 15% that they're paying, the extra 15% they're paying for the tariff, they can no longer use that for a local service. So if they were going to use that money at a local barber, at the cafe, they cannot use that. That is going to impact the revenue for the services. And it's once again, that's recessionary. So you can see how it's all tied. You can see how it's all connected. Now, why would Trump, to be honest, he's the main instigator with this, even though lots of countries have been using tariffs long before Trump came in, let's be honest. But this time he's actively, aggressively using it. Why is he doing that? Well, the long and short of it is they want a recession. They want a recession very early so that they can blame Biden. It's not just him. Lots of politicians do this when there's a change in party. In the UK, we would have seen Labour blaming the Tories for the poor economy. It's just something they always do, just to pass the blame on. So he wants to crash the economy as early as possible so that he can then revive it towards the end of his term. It's part and parcel. It comes with politics, to be honest. So it doesn't shock me at all. So they want to crash the economy, get all the bad debts and the waste out of the way so that they can then, I'm not saying that they're not going to print. They will be printing, but they just need an excuse to print. So they're just going to crash it now, print later. And you can see that stocks don't like this. The stock market does not like tariffs at all. Once again, the economy is likely going to crash because of the recession. And you can see stocks don't like this. So just in March, this is the monthly chart of the S&P 500. It's the SPY. It's the ETF that tracks the S&P 500. And just this month alone is down by 5% off its highs. If I turn on the support and resistance, you can see it's lost support. It's lost support. It's now going to trend downwards. Let me see how far it could possibly go to the next trend line. It could likely drop by 15%. It could likely drop by 15%. So look out below. Anyone who's investing in stocks right now, doesn't look like the next support point is coming in anytime soon. Obviously, it could reverse if something unexpected happens. But by and large, the trend, the momentum says it is going downwards. Same thing with the Nasdaq. That's a tech-focused index, the Nasdaq 100. Same thing, it's also down. So there's one asset group that is doing very well. There's one asset group doing very well, and that is, you guessed it, gold. Gold is up. about 4.5, roughly 4.5% this month. And then it's trending higher because the COMEX, the Commodities Exchange in the US, is buying gold hand over fist. They finally joined the party that Russia and China and India were at for about a year and a half. America has finally joined the party. They started importing lots of gold from the UK. And it doesn't look like there's an end in sight. I think there's something going on behind the scenes. They're probably going to try and revalue gold at some point soon. So yeah, buy gold now. I'd say hold off on stocks. Hey, listen. The charts don't lie. The charts don't lie. This is the S&P priced in gold. So far this month, it is down 9.3%, and the Nasdaq priced in gold is down about 9.7%. So there's an asset class that's winning. There's an asset class that is winning during all of this trade war. So choose wisely. I hope you guys enjoyed this video. It was a quick one just to let you know and understand what tariffs are and who pays for them and how to protect yourself from what's ahead. So I hope you enjoyed it. Please hit the like button if you did and you found it informational. Share it out with people you believe will need to understand this as well or who've been asking questions. Please subscribe if you're new and you haven't already, and I'll see you in the next video. Peace.